If you're holding out for cheaper homes and cheaper rates, JP Morgan has some real bad news for you, and oddly, some clarity. Let's pause for a second. They did not see a crash, they see a stall. The belief we are challenging right now. Everyone's been told, just wait, rates will fall, prices will follow. JP Morgan does not buy it. They're projecting mortgage rates to stay above 6% through 2026. Home prices staying flat nationally, not falling. This is not a buyer's market or a seller's market. It's a strategy market. What the data actually says. JP Morgan says the US housing shortage is not 5 million. It is closer to 1.2 million. Translation, the problem is not enough homes everywhere. It is too many homes in some places and not enough in others. They're already seeing prices pressure on the West Coast, oversupply stress in parts of the Sun Belt, stability in tight, underbuilt metros. Sound familiar? That is San Antonio in a nutshell, block by block. Why home prices won't fall even with higher rates. Here's the quiet frustration, the lock-in effect. Millions of homeowners are sitting at 3% mortgages and are not going anywhere. They're not selling, inventory stays tight, prices stay sticky, and a slower job market, and suddenly no one is moving unless they have to. Divorce, downsizes, diapers, diamonds, and that is why prices do not collapse even after the fastest rate hike in decades. Where buyers are actually winning right now, JP Morgan points out 3 pressure valves: builder rate buydowns, adjustable rate mortgages, incentive-heavy new construction. That is where leverage lives, not on resale with golden handcuff mortgages. In San Antonio, this means certain new builders corridors equal negotiating power, established neighborhoods equal competition, not discount. What about politics and policy? Investor ban barely moved the needle. Institutional buyers make up 1 to 3% of purchases. Even the proposed $200 billion mortgage support would have shaved a fraction of very little off rates. Not great. Helpful? Slightly. Game changer? Not even close. What this means for your next move. Waiting for a crash is a gamble. Is it even worth it? Planning for a flat prices and higher carrying costs is the new reality. If you're buying, budget for today's rate, not future hope. Target areas with excess supply. Use incentives strategically, not emotionally. If you're selling, pricing precision matters now more than ever. Overpricing equals invisibility. Strategy beats optimism. The people doing the best in this market are not guessing. They're running the numbers and rerunning the numbers and doing it again and rerunning the numbers. If you want to know where San Antonio is tightening and where it's cracking, let's talk. That is where the Garza home team and Rosa and I will walk you through what this really means for your home, your neighborhood, your budget, and your timing. Like, share, subscribe.